Silicon Valley shockwaves. Trump's Nvidia restrictions trigger global market tremors. Wednesday witnessed a dramatic plunge in global markets, triggered by a seismic shift in U.S.-China trade relations. The epicenter? A seemingly innocuous announcement concerning Nvidia, the California-based chip design giant, sending shockwaves through the tech world and beyond. The ripple effect was immediate and brutal. Billions wiped off Nvidia's valuation, a widespread sell-off in the semiconductor industry, and a palpable sense of uncertainty hanging over global markets. The catalyst for this turmoil was President Trump's imposition of new trade restrictions on Nvidia, specifically targeting the sale of its advanced H20 chip to China. This move, implemented through stringent new licensing requirements, effectively choked off a crucial revenue stream for Nvidia, a company at the forefront of artificial intelligence and high-performance computing. The immediate consequence was a sharp decline in Nvidia's stock price, reflecting investor anxiety over the potential long-term impact of these restrictions. The impact extended far beyond Nvidia's share price. The broader market reacted swiftly and decisively. The S&P 500, a bellwether of U.S. economic health, experienced a significant drop of approximately 1.3% in early trading. The tech-heavy Nasdaq index fared even worse, plummeting by 2.1%, highlighting the disproportionate impact on the technology sector. The Dow Jones Industrial Average also felt the pressure, falling by 0.6%. The sell-off wasn't confined to the U.S. It rapidly spread across the globe, impacting semiconductor manufacturers in Asia and Europe, underscoring the interconnected nature of the global economy. This event marks a significant departure from the relatively lenient approach the chip industry had enjoyed until now. Despite the 10% tariffs imposed by the U.S. since April 2nd, the semiconductor sector had, until Wednesday, remained largely exempt. This exemption reflects the crucial role semiconductors play in modern technology and the global economy. The sudden shift underscores the escalating trade tensions between the U.S. and China, particularly concerning the dominance of advanced technologies. The Trump administration's move aligns with a broader, long-term strategy to limit China's access to advanced chip technology. This policy, pursued with increasing intensity under both the Trump and Biden administrations, reflects the intense geopolitical competition for technological supremacy, especially in the crucial field of artificial intelligence, AI. The race for AI dominance has become a central element in the ongoing U.S.-China strategic competition, with both countries investing heavily in research and development and vying for global technological leadership. Adding to the market's woes was a stark warning from the World Trade Organization, WTO. The WTO projected a significant contraction in global trade growth, directly attributable to the impact of Trump's tariffs. The organization revised its forecast from a modest 2.7% expansion to a concerning 0.2% decline, painting a bleak picture of the potential global economic consequences of escalating trade protectionism. Adding another layer of complexity to the situation, oil prices surged on Wednesday, fueled by a combination of factors. Renewed hope for trade talks between the U.S. and China, coupled with Iraq's announcement of planned oil production cuts in April, contributed to the price increase. Brent crude climbed by 1.3%, reaching $65.49 a barrel, while U.S. crude experienced a similar rise, reaching $62.12 a barrel. These price movements highlight the interconnectedness of global markets and the sensitivity of commodity prices to geopolitical events. The reshuffle in China's trade negotiating team further added to the uncertainty. Beijing's unexpected announcement replacing veteran trade negotiator Wang Shaowen with Li Chenggang injected an element of unpredictability into the already volatile situation. The reasons for this abrupt change remain unclear, but it occurred amidst a broader governmental reshuffle, raising questions about China's future trade strategy. Adding to the already complex situation, California, the heart of Silicon Valley, launched a legal challenge to Trump's tariffs. The lawsuit, filed by Governor Gavin Newsom and Attorney General Rob Bonta, argues that Trump overstepped his executive authority and that his actions severely threaten the state's vital trade interests. This legal challenge introduces another level of uncertainty, potentially prolonging the trade dispute and further impacting market stability. Amidst this global economic turbulence, President Trump announced upcoming trade negotiations with Japan, focusing on tariffs, military support costs, and trade fairness. The meeting, set to include key cabinet members, hints at a possible shift in the administration's approach to trade negotiations, potentially offering a glimmer of hope amidst the current economic storm. However, the outcome remains uncertain, adding another layer of unpredictability to the already volatile global market. The events of Wednesday underscore the fragility of global markets in the face of escalating trade tensions. The impact of Trump's restrictions on Nvidia, amplified by the WTO's warning and the shifting sands of Chinese trade policy, has sent shockwaves through the global economy. The coming days and weeks will be critical in determining the long-term consequences of these actions and the future trajectory of global trade relations. The situation remains fluid and underscores the need for careful navigation of these complex geopolitical and economic currents.